Good evening. This is Ken Long from Tortoise Capital with a review of the weekend trading reports for September 24th, 2016. Markets in bullish normal conditions. On an annual basis, using weekly RSI 14, it's at the higher end of neutral at 61 out of 100. On a 10-day basis, using the 10-day NDX, it's the higher end of neutral with 76 out of 100. Price with respect to the 200-day moving average is 5.84% or white bullish. Slope of the 50 is yellow neutral at positive 0.08. ADX is a neutral, non-trending 21.5. However, the bulls did cross over and are now in charge compared to the bears. The risk index is the 30-period moving average of the VIX divided by the 10-period. 1.0 is the threshold between risk on and risk off. That reading currently is at 0.912, so we're deep into risk off. Compare that to the last 5,000 trading days and find the average and standard deviation. Lets us compute the risk Z, which is a minus 1.08 standard deviations below the long-term average. Here you see a 90-day histogram of that indicator. We've gone from a minus 2 sigma to a plus 3 sigma, back to minus 2 sigma, and now are curling up. When it's rising like this, like in a MACD histogram, we can begin thinking about swing trade positions. This is on the way down. This has been excellent opportunities for intraday volatility, but not swing trading. This, however, is a gateway towards improved swing trading, so we'll start to look at that time frame as well. No change in the blended monthly rebalancing. You can see the holdings for this month and the leaders as of Friday's close of business. Theoretical exposure at ETF2 is at 100%. The model portfolio itself is at 100%. These are the blended monthly rebalancing portfolios for the 13 ETFs and the 32 ETFs in those two portfolio universes. You see there's a big rebound in all the equities this week, led by the previous relative strength winners like Latin America, Brazil, small caps, technology, and emerging markets. Only a handful of ETF 32 remains on a cash signal. In ETF Max, again, we get the winners have resumed their winning. Silver, biotech, Brazil, energy, China have all resumed their march northward. The S&P 500, the top 40 or so, you can see that previous relative strength winners are still on top, with a few notable exceptions where they gave back a little bit, like Applied Materials and Chesapeake Energy. But these in the green are ones that really have been exceptional. Endo International looks to be of interest, coming off a bad 6 months, but has really turned it around in the last 3 months, 1 month and 1 week. Probably deserves our attention. Strength in energy, Console Energy, Autodesk, and Amazon, which closed at an all-time high this week. In the market health check, the 10-period RAF regression channel has rotated up. Despite the one-day sell-off, we're still back at the Bollinger Band mean after an excursion down to Z-3. We're back up to the zero line here in term with this fair value of the last 50 days. And I think that's the most likely scenario, is to remain in that range until we get some clarity coming out of the presidential election in early November. That's the least surprising scenario. However, there have been moments of sharp volatility, like this one down and this 2 or 3 days up. So this is a very vulnerable market to that kind of sharp surprise movement. So I'm going to maintain my orientation on the short term while being open to the possibility of some swing trades here. It really, for me, has to get above 219 to really think about the long side on a swing basis. The upside would be about 225 if it can break through this ceiling. Further failure here would take us down to retest 211. If that fails, it's the previous support level at 209. If that collapses, then it's a quick drop down to the 200-day moving average at 204. In the ETF2 regional report, the S&P at 43 is lagging behind the globals of VFA at 48, so it's the globals over the U.S. right now. Inside the U.S., it's small caps at 55, tech at 54, led by Amazon, Intel, and Apple, and then mid caps and small caps bringing up the rear. The two strongest sectors, Latin America and emerging markets. The two weakest sectors, U.S. large caps and mid caps. In the world market model, Europe has rebounded finally. There's a mixed bag here in the Asian area. Lots of big winners, big losers. Latin America, emerging markets, and Brazil continue to dominate, while U.S. small caps and growth are the only positives in the U.S. Silver also putting in a dominant move these days. ETF 2 lens, looking at the ETF top 30, the most liquid ones, based on average daily volume. Biotechs, gold, Brazil, silver, China, natural gas, and then some new movement to the top here. Again, biotech, emerging markets, Latin America resuming, and more emerging markets. In the Dow, you can see a lot more red and yellow than white and green. Intel, Apple, and Merck at the very top. Microsoft up there as well. Caterpillar started to give back a little bit. It's white and green. Exxon, Coke, Disney, McDonald's, Verizon, all suffering here at the bottom in the red. Shifting to the daily report now. Only a couple channeling signals and just a couple auto framers. Here you can see that the bulls have resumed control here in the ADX. Not much to choose from on one-day pattern trading from the Dow or in ETF 30s. Just a couple in the auto framer setting up nicely, and in the top shelf here in the regression line fractal framework, you can see in the green, these are the symbols that are the deep value plays, the ones that are the most ATRs below their RL270, Exxon Mobil, McDonald's, Coke, and then these are the symbols that are the most ATRs above their RL270, so relative strength leaders again, Apple, Intel, American Express. The one-day pops, these are the ones that have compressed enough on a one-day basis where the daily range from yesterday, if you use that as your risk measure, the retest of the 10-day high and the use of the range stat for intraday moves gives you the ones that are poised for large one-day pops, and so you see a lot of big names in here that are well positioned for that kind of swing trading one day at a time. In the market mosaic, you have the failure to fail further here. 212 held, came back and retested 218. Despite the one-day sell-off, we're still, you can be a little bit optimistic about that. The last 3 times that the slope stat came down, found support here. There were bumps of 3 to 5% in each case, so this would take us up around 225 if that were to be the case, but it would have to get through the ceiling at 218. Well postured to do that based on the stretch stat. We're still looking at higher lows in this case, and if again we get through 218, 225 is in sight. And that's everything I wanted to cover for this weekend. Again, being rewarded by keeping your risk measured and powder dry, and taking your opportunities and locking in those outsized gains when you get them, rather than trying to hold out for more. I think until the politics sorts itself out, that's the preferable play. So, Ken Long from Tortoise Capital, and we'll see you in the chat room.